All right, welcome everyone. This is Bob Maurer. It is Monday, the 19th of August, around about 2:45 my time. I want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. Let's hop into it and dialing into the portal. You'll see the most current PDF version. Just uploaded that a short time ago. Click on it and brings it up for this week, the week of 8/18. And here we have it. So we've got 5 strategies on here. 4 of them are still working. The blue one, the bullish heating oil, got stopped out today, unfortunately, which would have been about 639 loss if you averaged in, and about 252 if you were more conservative level 2 entry only. Other ones are still in place. We'll take a look at those. So there'll be 4 bear spreads that are left. Let's get to the charts. First thing is, we'll take them one by one in order. Feeder cattle bear spread. All right, this is strategy number 313. Pretty easy to see we're not filled. We've got our offers up at 27, or I should say 77 and 122. Market's been in a sideways band here for a while, basically since the onset of the strategy window, and that's been a low of about our first target, and then the high up about the benchmark. So it's about a 100-point range, it looks like, from top to bottom, which would be a $500 range. And we're just looking for this thing to get some kind of catalyst to push on up. Maybe a continued break in the grains might help it. Cash bid in cattle land moving to the upside, shaking off that weakness from a couple weeks ago when we had the big push to the downside in live cattle and feeder cattle. So we'll just keep an eye on this one. But walking it forward, it still looks viable, so we're going to stick with this one. So basically no fill and no change to the strategy yet. That's number 313, the bear spread and feeders. Okay, then we've got the fat cattle, also bearish. And this one I'm staying with, even though it already would have been technically stopped out. So those who are true to the true to the data and wanted to make sure you got your risk defined at negative 87, and it is what it is, then you should be out. However, those who stuck with it, because as I mentioned in the prior videos, walking the data forward, it still was leaning to the short side, and the timing was setting up to look for some kind of break in the next week or two, that is, after it would have been stopped out. So some have stuck with it. So to that point, and for those who are following along still, the market has had a bit of a break, but it has caused a bit of pain here. We're still sitting in unrealized loss territory. The market broke out of this triangle, right, from the A, B, C, D, and then pushed out here, right, made a new swing high, and then basically ran out of steam, ran out of buyers. And the classical mindset of broken resistance becomes new support. You could see that this downtrending line of the triangle was resistance, broke out of it here, and that was on the 9th of August. And now it's looking as support, right? Held up Friday, so far held up today. So what we really need to see is this thing continue to work its way lower, and then hopefully this support here becomes resistance, so it breaks on down, and we start playing it to our advantage with it being some resistance. But there's no guarantees on that. So we're keeping a close eye on it. We are better than the stop. All right, the stop had been at negative 87. We went out today about negative 102. So that's a good thing, but we're still not 100% out of the weeds yet. But that's where we're at with this one. So the targets to the downside are the same. The stop is still a variable. The market is currently sitting in unrealized loss territory, and I will keep you abreast of my opinion as things evolve with this market. It may certainly be that we need to pull the plug if the thing pops into a new high territory, but hopefully what will happen is the opposite, and we see this thing push on down. All right, so that is bear spread live cattle number 314. We've got natty gas. And as it says in orange, this one was revised on the 9th, so about 10 calendar days ago. All right, this one, both levels should be filled, negative 280 and negative 274. Stops at negative 254, so no change to the revised strategy. Targets on the bottom are still the same. Market basically had a decent rally, allowing both levels to get filled. And now we just need to see a considerable break to push into new swing low territory and start hitting our targets. We've got plenty of time on this one. Goes all the way till October 6th. So we've got half of this month. We got all of September and then the first week of October for this thing to work its way lower. So again, no change. Currently sitting, if you're the more conservative entry level trader, you're sitting with some level of unrealized gain. If you are an average in trader, you're also sitting with just about break even, really. You'd be around negative 277 if you got in at the levels I have here. And we're at negative 282, so just 5 points or so to the good at the moment. Market's not closed yet. So we'll just see if this thing can push on down. All right. That's the natty gas. Things are going okay there. Heating oil is a bit of a sore spot. So we got stopped out today. This thing just has collapsed over the day period. Our objective was to get long. The seasonal projected long. The seasonal still projects long. I mean, I walked it forward as of today, and it still projects long. But with this market in particular and heating oil, it can just start taking off in one direction against the seasonal pretty easily. So that's why I wanted to stop to stay at negative 166. Had it working for those who were in a position and that I know about, and they got stopped out today. So the loss would have been about 640 per two lot if you averaged in, 252 per one lot per lot that you're in if you got in at level 2. All right, and as you can see, market consolidated for about 2 weeks, okay, between the onset of the window and August 15th, and then the last couple of days just cratered, so, and into new low territory. So it's going completely counter-seasonal, and we should be out on this one. So that one ended up being a realized loss. And then we've got wheat. Last but not least, I'm bringing in the view here. So this is strategy number 318, bear spread in wheat. Started on the 15th and looking to get short. Levels were the benchmark, which was a negative 11.5. Traded through that on Friday, so could be filled. And I'm going to walk it forward as if you are. And then the second level will be negative 8 3/4. Stop at negative 5. So we are looking for this thing to push a little bit lower. First target is pretty conservative, negative 13. It'd be a $75 gain if you got in at the negative 11.5. And then we've got negative 14/4, negative 16/4. So we just need this continue to build to the downside. Hopefully take out this swing low here, which was negative 13. And that would hopefully give us some new momentum down to these next two levels. All right, so far everything's according to plan on this one. We'll see how it plays out. So no change to the strategy. Those who got in should be sitting with some realized level of modest gain at the moment. Unrealized level of modest gain at the moment. All right, so we got the loser with the heating oil. We got some work to do with natty gas, but things are looking favorable there. Same with the wheat. Things are looking favorable there. Feeder cattle are not filled yet, so I think that brings everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there, and thanks so much for watching.